Imagine the government as a person who has spent far more than they earn for decades. To stay afloat, they keep taking out new credit cards just to pay the interest on the old ones. This is exactly what is happening to the United States right now. As of late 2025, the national debt has hit $38 trillion. To put that in perspective, if every American citizen and every business worked for an entire year and gave every single penny of profit to the government, it still wouldn't be enough to pay off that debt. In fact, we'd still be $10 trillion short. We have reached a breaking point where the interest alone on this debt costs more than our entire national defense budget. The government isn't building the country anymore. It is simply struggling to pay its bankers. This desperate financial situation is the real reason why Washington suddenly changed its mind about Bitcoin. For years, politicians and big banks told you that Bitcoin was a scam or a tool for criminals, but now they have suddenly opened the doors of Wall Street to it. This isn't because they finally fell in love with new technology. It's because they are looking for a new source of money to save a failing system. By creating Bitcoin ETFs and passing new laws, they are trying to pull your digital savings into their world. To the public, they call it innovation. Behind the scenes, it's a desperate search for a new way to fund their mountain of debt. For those who remember the 2008 financial crisis, this feels very familiar. Back then, the big banks lied about the quality of the mortgages they were selling, and the government's watchdogs failed to protect the people. Today, while the tools have changed, the risk is the same. The system is losing our trust. As prices at the grocery store keep rising and the dollar buys less and less, the people in power are trying to hit the reset button by using Bitcoin. The big question we must ask is this new system an exit ramp for you to protect your savings? Or is it just the latest trap designed to keep the next generation paying for the mistakes of the past? In early 2025, a new law called the Genius Act was passed. On the surface, the government told us it was just a way to make digital currencies like stablecoins safer for everyone to use. They promised it would bring order to the Wild West of crypto. But if you look closer, this law is actually a clever way for the government to find new people to lend them money. Here is how it works. Stablecoins are digital dollars that people buy when they want to keep their money safe but stay in the crypto world. To make these digital dollars stable, the companies that issue them must keep real money in a vault. The Genius Act now forces these companies to take that money and buy U.S. government debt, also known as treasuries. So every time you buy a stablecoin, you are unknowingly lending your money to the government so they can keep paying off their $38 trillion debt. In the past, countries like China or Japan were the biggest buyers of American debt. But now that they are buying less, the government needs a new customer. By passing the Genius Act, they have turned every crypto user into a new source of funding. They aren't fighting crypto anymore. They are using it as a digital vacuum to suck up cash and finance their spending. The danger is that now, if the government's finances fail, your digital wallet might be the one that feels the crash. They've tied your savings to their debt, making sure that if they go down, the whole digital world goes with them. Now that the government has found a way to use stablecoins to fund their debt, the big banks on Wall Street want their piece of the pie. This is where the Bitcoin ETF comes in. For years, big financial firms like BlackRock and Fidelity called Bitcoin a dangerous bubble. But in 2024 and 2025, they suddenly flipped the script and started inviting you to buy Bitcoin directly through your stock account. They call it a convenient way to own the future, but there is a massive catch that most people don't see. When you buy a Bitcoin ETF, you aren't actually buying Bitcoin. You are buying a piece of paper, a digital receipt that says the bank owns some Bitcoin for you. The bank keeps the real Bitcoin in their high-tech vaults, and you get a ticker symbol on your phone. This gives them total control. They become the gatekeepers of your wealth. To keep the Bitcoin ETF running, the system relies on authorized participants, APs, giant banks like JP Morgan and Goldman Sachs. Their official job is price balancing, ensuring the price of the ETF on your phone matches the price of the actual asset in the vault. While this sounds like a helpful service, it is actually a risk-free profit machine that exploits your emotions. The balancing act works in two ways, and the bank wins in both. First, when everyone is greedy and rushes to buy, the ETF price gets pushed higher than the real asset, say $101 for the paper share, while the asset is only $100. The bank balances this by buying the asset at $100, swapping it at the fund's backdoor for a new share, and selling that share to you for $101. They pocket $1 instantly for fixing the price. Second, when panic hits and everyone sells, the paper price drops below the real asset. Say $99 for the share, while the asset is still worth $100. You are desperate to leave, but the law bars you from claiming the real asset. The bank, however, uses its exclusive privilege to buy your cheap $99 share and immediately exchange it at the vault for the $100 asset. They make another $1 profit while taking the real asset for themselves. This is the laughably unfair reality. They aren't protecting the market for you. They are simply waiting for the price to drift so they can collect a toll. They own the only bridge between paper and reality, and they charge you a fee every time you are forced to cross it. The most absurd part of the ETF system isn't just the profit banks make. It's the legal monopoly they hold over the exit. To understand how dangerous this is, we must look at the history of GBTC. For years, GBTC was a closed-end fund where ordinary investors were locked in. When the market soured, the price of the GBTC paper crashed far below the value of the actual Bitcoin in the vault. At one point, it was selling for 40% less than the real asset. Investors were trapped watching their wealth evaporate on paper, while the real Bitcoin sat untouched in a vault they couldn't reach. The new Bitcoin ETFs are marketed as a fix for this, but the same authorized participant AP trap remains. The law still dictates a double standard. You are strictly forbidden from asking the fund for the actual assets. You can only sell your paper for cash. But for the giant banks, the back door is wide open. They are the only ones with the in-kind redemption privilege, the right to swap paper for real assets. Imagine a crisis where the dollar loses value rapidly. You look at your ETF and see a GBTC-style crash where your paper is worth 30% or 40% less than the assets in the vault. You are forced to sell at that massive loss just to get some failing cash. Meanwhile, the banks step in as the predators of the gap. They buy your devalued paper for pennies, walk to the fund's backdoor, and exchange it for the full value real assets. They don't save you from the crash. They profit from your inability to access the vault. The system is designed so that the public absorbs the paper losses of a crisis, while the banks use their exclusive keys to walk away with the physical wealth. A digital solution for a $38 trillion debt. After looking at the banks, we must ask the final question. Why does the government allow this unfair system to exist? The answer is simple. The U.S. government is not a referee in this game. They are the biggest player. With a national debt of $38 trillion and a GDP that cannot keep up, the government is desperate for a way to fund its spending without causing a total collapse. This is where the digital trap closes. By allowing banks to monopolize Bitcoin through ETFs and forcing stablecoin issuers to buy treasury bonds via the Genius Act, the government has achieved a brilliant dark maneuver. They have effectively digitized the national debt. They are no longer just printing money. They are sucking the liquidity from the digital asset world to prop up the failing dollar. Every dollar you put into a regulated digital asset is a dollar that the government uses to breathe one more day of life into its massive debt. The banks get their arbitrage profits, the government gets its debt funded, and the public gets a paper certificate that feels like wealth but carries all the risk. This is the ultimate soft landing for the elites. They move the real assets into their private vaults, while the public is left holding digital receipts of a system that is mathematically impossible to sustain. The government isn't embracing innovation, they are weaponizing it. They have turned the digital revolution into a federal life support machine, ensuring that when the $38 trillion anchor finally pulls the system down, they and their banker friends are the only ones holding the lifeboats. Final act your choice, paper receipt or real key. We have unmasked the game. From the $38 trillion debt to the backdoor privilege of the big banks, the system is designed to keep you inside a digital cage, while the elites secure the only exits. They want you to believe that a paper receipt on your phone is the same as true ownership. They want you to trust the same institutions that created the crisis to be your protectors. Now the question is for you. Are you comfortable holding a promise from a system that is mathematically broken? Or do you believe it's time to demand the right to own your assets directly, without gatekeepers and without middleman? History shows that in every financial crisis, those who hold the paper lose, while those who hold the keys survive. The $38 trillion clock is ticking. What is your plan when the music stops? Leave a comment below. Do you trust the regulated safety of the banks, or are you ready to take your wealth into your own hands? Let's expose the truth together. Share this to wake up those who are still sleeping in the paper cage.